And welcome to my home office. It's another tough day in lockdown in Sydney. Well, actually for some people it is very, very tough. And for other people it's a lot more comfortable. It's not pleasant for anyone, but obviously we're very lucky if we happen to be in a location like this, which brings me to my first tip for you today, investment tip. When buying property, location has always been important, but now it's all about that 5-kilometre radius from the property you're purchasing. You need access to waterfront, you need access to park, and you need access to all the great food shopping that you could possibly desire. In terms of markets, in the US market yesterday, we saw an attempt at a rally, but it didn't quite happen. Well, it happened, but it was very modest. It was more impressive in some particular stocks or indices than others, but overall, it was really a lackluster performance. I mean, given previous patterns of behaviour, last night should have been when all those who steadfastly believe and you just keep buying the dip because the market can only go up, they were all active yesterday, and that was the best the market could muster. So I think that's a real warning sign of itself. Of course, we're going into a Friday trading session in New York where anything can always happen. With the economic data yesterday, the new jobless claims were an improvement, but they're still 50 to 80% above where they were pre-COVID, which means a lot of people are still losing their jobs, getting laid off. So it's not an entirely great reason to be buying stocks, but I guess progress is progress. The other thing was manufacturing index, Philadelphia Fed manufacturing index, falling again, still further, a little bit of a sharp drop. And in fact, it's actually in territory that is below where it was pre-COVID. So that's not a great sign. The economic picture is, as we've been saying for quite some time, far less rosy than many people would like to believe. When it comes to currencies, the US dollars remain firm. The euro, I'm still thinking 111, 112. It is due a bit of a bounce here. So potential for a bit of a US dollar pullback, but again, I think it will only be marginal, and the overall trend towards safe haven buying US dollars is something that probably I don't support as a concept. I'm not seeing the US as the safe haven it used to be, but it certainly will be a factor among the thinking of many global fund managers. Just before shooting this, I was wondering, if you were an Australian fund manager and you were 100% long, how stressed would you be this afternoon? Pretty stressed. If you're an Australian fund manager and you had no stocks this afternoon, would you be stressed about the possibility of missing out on gains? By nowhere near as much. Now, neither of those situations actually exist, because portfolio managers always keep some cash, some stocks, but the weighting shift, it's going to be the people who are mostly long who are stressed, and therefore we have to be thinking in terms of what would hurt the market. And in this situation, because often that's the path of least resistance for the price of any market, and on this occasion I think that's probably going to be to the downside still for US stocks tonight. A little bit of volatility, but I think they could be heading lower. For the Australian market, well, we're in a recession, and it'll take 3 to 4 months for the economic data to tell us this, because economic data is backward looking. So one doesn't necessarily wait for the data, one has to observe the real world. Australia is in recession and it's going to intensify. Premier of New South Wales keeps talking about opening up for those who are vaccinated if we get to 70%. And so if you're vaccinated, but the whole society has to be at 70%, you're allowed to go to outdoor dining. It's not that big a motivating factor. It's not as if fully vaccination, a lot of people are thinking full vaccination would mean total freedom. No, it won't, but it will have a few little credit points for you. Overall, the situation on COVID continues to deteriorate in Australia, in the United States, around the world. It is interesting to see large case number increases in the US and the UK in highly vaccinated areas are still seeing a surge in hospitalizations and a surge, unfortunately, in deaths, but nowhere near to the degree that was the case last year. So That certainly is a bright spot for the vaccination, growing around the world, levels growing around the world. But again, I just have to emphasize, vaccinations alone will not solve the problem. In the end, we have to live with it, but we can try and minimize the price of having to live with it, especially in countries like Australia and New Zealand still. For the markets, you just sell the Australian dollar. I think you should be, it's a currency under a lot of pressure. The local economy's in recession, and the foreign situation has suffered a few blows as well, and it looks like the US economy is slowing. China's coming back to about where it was before the crisis, but that's still pulling back from the recent strong rates of growth. And Europe is showing signs of slowing again. UK consumer confidence just came out. It's negative, but UK consumer confidence has been negative since 2016. So we do have to take the underlying mood of the population into account. Some people might suggest the underlying mood of the Brits is a little bit pessimistic. I'm not sure if that's true. I'm just saying that other people are saying that. But certainly managing the downside risk in the Australian dollar is very important at the moment, and managing the downside risk in the Australian stock market is vitally important at the moment. Thank you very much. I hope you have as nice and sunny a weekend as I hope to have, and I wish you all the best for that weekend. Clifford Bennett, Chief Economist, ACY Securities.